Hello everybody. We have with us today Lisa for our webinar series on insurance. My name is Chi and I'm with Grenville Guardian Real Estate, and I will be your host today, and we'll have a guest speaker with us, Lisa, again, who, if you've seen our videos before, you know that Lisa shares with us some insurance information for home buyers. Hi, Lisa. How are you?
I'm great. Thanks, Chi, for having me on today. So, Chi, I'd like to draw to attention for your clients, especially a lot of young clients will not know the difference between insuring their mortgage through the bank or through their lender, or life insuring their mortgage. So I'd just like to explain to them the difference between the two. So you can see here a very modest home, $250,000 mortgage. What happens at the bank or at the lenders? They're insuring your mortgage based on the amount, $250,000, or the purchase price of the home, and based on your age and health at that time. Over time, you're going to pay your mortgage down. So what happens at the bank, if you or your partner passes when your mortgage is paid down to here, and maybe there's only $50,000 left on it, all that the bank or the mortgage lender is going to do is pay out the remainder of that outstanding loan. However, for the duration of that loan, you are paying the premium or the cost of insurance based on a $250,000 loan. With life insurance, you're putting life insurance in place at the time that you purchase your mortgage, or just before, ideally. Your life insurance amount is level, and it's the same price for the duration of your loan. Now, if you or your spouse passes here, for example, you are getting the full $250,000 amount, or whatever amount you put on your life insurance policy, and now your partner has choices. They can invest that amount, use the return on their investments to pay off their mortgage payments. They can choose to pay off the remainder of their mortgage, but in any regard, they now have choices as to what they do with that money. If they pass earlier on, you have the entire amount of your mortgage insured. If you don't insure your mortgage, what happens is that your spouse is left with that debt load. The lender expects it be paid out at time of passing of your partner. And this is where we end up with a lot of houses going to market because people just can't afford it. The benefit with life insurance as well is we can make sure that whatever your cost of living on your household expenses, so if your household expenses need to be taken into consideration, yes, we can pay off the mortgage, but can you still maintain your lifestyle living in that house if you no longer have your partner's income? And that's where a financial advisor comes into play to really help you crunch those numbers and see exactly what amount of life insurance you should put in place. I hope that answers your question, Chi.
Yeah, it does. That's great. And Lisa, just for people out there who may be confused, when you're speaking about insuring your mortgage loan amount, correct? And not the mortgage loan insurance that CMHC requires by the lender.
That's correct. It's just the amount that you are actually borrowing from your lender that you are insuring.
Perfect. So thank you so much, Lisa, for answering that question. And I'm just going to share with you some of Lisa's information if you need to get a hold of her. Lisa, you can email her, Lisa Venne at sunlife.com, or you can give her a call, message her on LinkedIn, check out her website. She's very responsive to messages. And Lisa, did you have any last things to say to anyone or any extra tips to share as well?
No, that's all for today, Chi. It's great if people can take a look at the cost of this, because generally it's less expensive than at the bank, especially when you're young and healthy. For example, I ran an illustration on a 35-year-old female non-smoker. You're looking at less than $20 a month for a $250,000 mortgage.
Perfect. Thank you so much, Lisa, again for joining us today for our webinar series on insurance. And we hope to speak to you again soon. Bye.
My pleasure. Bye.